Introductory Calls with Investors, Managing an Investment Bank Process. This is Lesson 5 of Class 3. In this lesson, we will review the procedures and the components of an introductory call. We will discuss how to facilitate an introductory call and the common banker responsibilities before, during, and after an introductory call. Background. Following the official launch of the deal team will begin to receive investor feedback. A large part of the junior banker's responsibilities within deal management is the effective facilitation of seamlessly moving investors through the deal funnel. Some of the initial steps in the deal funnel is the processing of introductory investor calls between potential investors and bankers. In this lesson, the Warren Fox Group outlines the following steps of the deal funnel. 1. Receive initial investor feedback. 2. Schedule introductory calls. 3. Facilitate introductory calls. And 4. Post-intro call action items. Receive initial investor feedback. Handling investor responses to outreach emails. 1. The feedback could be positive. In this case, the potential investor shows initial interest after reviewing the teaser and wants to learn more about the opportunity. The investor will likely agree to complete an NDA. The investor will ask for times to set up an intro call with the bankers. In this case, the junior bankers need to respond promptly by sending any NDA comments back to the client for review while simultaneously providing time slots for an intro call. The goal is to have an NDA completed prior to the intro call so the opportunity can be discussed more openly. In some cases, investors will state that there is no interest in completing an NDA until after the intro call and will operate on a no-names basis until then. Negative feedback. In these cases, the potential investor is uninterested in the deal after reviewing the teaser and passes. The responsibility of the bankers when an investor passes is to always thank them for the review and try to determine the reason for passing. If the banker can determine a reason for passing, they can return feedback to the client. And in some cases, there's neutral feedback. The potential investor responds with additional questions relating to the deal and indicates that more information is needed prior to fully reviewing the opportunity. In this case, the practitioner should provide answers in a prompt fashion to help the investor feel more comfortable about the deal. Schedule intro calls. If the investor is interested in meeting with the deal team for an intro call, the junior banker will attempt to coordinate a meeting time and facilitate an NDA. Coordinate a meeting time. Check the schedules of senior bankers and offer available times. Coordinate a meeting time that works for both the senior bankers and the potential investors. Send out meeting invites to all participating parties. Remember, in auction processes, the outreach scope is wide. Therefore, coordinating schedules and organizing people can quickly become very complicated. Facilitate the NDA. In parallel to coordinating the intro call, junior bankers will be facilitating the NDA, which will be important if the investor would like to discuss the deal in more granular terms. It is not uncommon for institutional investors like PE firms or venture capitalists to sometimes forgo an NDA prior to an introductory call. Institutional investors frequently sign lots of NDAs because they are constantly evaluating opportunities and would prefer to avoid an NDA if the target has a very low chance of executing an investment. Facilitate intro calls. The senior bankers will likely run the meeting, but junior bankers have responsibilities prior, during, and following the pitch. So prior to the pitch, the senior bankers will prepare the pitch voiceover, take notes on the cheat sheet, and review internal memos on the investor. The junior bankers will send around notes on the investor and ensure the cheat sheet is up to date. A cheat sheet is a Word document created prior to launch that summarizes the client's main characteristics, high-level financials, market comps, terms of the deal, and will also likely include a Q&A section. During the pitch, the senior bankers will deliver the pitch, answer high-level questions, and provide an opportunity for the investor to ask any further questions at the end. The junior bankers will take notes, screen share any materials, and answer detailed questions about the client or the client's financials. Following the pitch, senior bankers will allow the investor to provide initial reactions to the opportunity and then try to help the investor think through any hesitations. The junior bankers will ensure that the NDA is completed. So following the pitch, we want to make sure that the NDA is complete so that further materials can be transferred to the investor to make any more diligence requests. So this NDA needs to be completed so that they have access, the investor has access to the SIM, to the data room, and the junior bankers also want to ensure that any specific diligence questions are satisfied and then begin moving the investor towards a management presentation. Main components of an intro call. So the pitch will likely be the same song and dance on every intro call, and they will follow the same basic principles. First, a general overview of the client. What the client does, when the business was founded, where the client is located, management team highlights, the company's latest post-money valuation, and a brief overview of summary financials. Investment highlights. Why the client is attractive now, the size of the opportunity, the client's competitive advantages, and any traction with large customers. And then deal structure. What the company is looking for, how much capital the company needs, the uses of capital, and the terms of the deal. So post-intro call action items. Near-term administrational tasks. Notes. The junior banker should save down the call notes to the internal drive, upload notes to the bank CRM, and send notes around to the deal team. The contact log. The junior bankers should record the meeting in the contact log and highlight any important follow-up items. Thank you email. The junior banker should always send a thank you email to the potential investor and acknowledge any immediate next steps. So post intro call action items, these are potential deal action items. So following the intro call, the junior bankers need to ensure that the action items are completed promptly and should encourage the investor to learn more about the deal by meeting with the client's management team. If the investor had data room access and then passes on the deal, the junior banker should immediately remove the investor's data room access following the intro call. Thank you for tuning into this lesson, and we look forward to seeing you in our next lesson, in which we will cover management presentations.